The rise of AI technology is massive right now, and everyone's using it for a bunch of random things. So I thought, what would be a better idea than to use Google's new AI technology, which is going to rival ChatGPT, and see what it could do for us in predicting Australian real estate prices, where the best places to invest are over the next 10 years, and when the RBA could actually decrease those interest rates. If you're interested, keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Occasionally we're gonna go through and predict things using AI technology, which makes no sense, but hey, we're gonna try it anyway. Now, given all the predictions that have been made in the media, I think this is our best source of information right now because there have been so many crashes or 30% drops in prices that have been predicted over the last 3 years that at this point we could probably tell a monkey to go pick which properties to pick, and they might actually do a better job than the journos out there. Anyone that's watching that's a journo, what's up? So if you've been living under a rock and you do not know what's happening with ChatGPT, it's basically an AI technology that can go out there and it's a better function than, say, search. So what did Google do? They said, hey,
let's create our own.
They created an AI technology system called Bard, and that's their response to ChatGPT. And to be honest, I've used both and I think this is far superior than ChatGPT in its current form. So what I did was I said, hey, I wonder what it would predict when it comes to Australian real estate and interest rates. And then I thought, hey, the answers are actually pretty good. So I thought I'd make a video about it because this is what I do in my spare time. Yes, I'm a loser, but let's continue. Now, I went ahead and asked it a bunch of questions and I took the top 10 responses from those questions and I asked everything from cryptocurrency to RBA interest rates, as well as the recession and where the best places to invest are. Now sit back and relax and see how AI can change our lives. So here's my first question. You are an experienced property investor in Australia and have been investing in real estate for the last 20 years. What trends do you believe are going to be key when buying real estate in 2023? They go on to say rising interest rates, increased demand for affordable housing, shifting demographics, and the rise of technology. All very valid points. Now, rising interest rates, the RBA has already begun to raise interest rates in an effort to combat inflation. This is likely to continue in 2023, which will make it more expensive to borrow money to buy a home. So far, AI seems to be doing its job and seems to be quite rational. As a result, investors will need to be more mindful of their borrowing costs when making a purchase. Now, the increased demand for affordable housing is largely driven by the cost of living in Australia. Now, I don't want to make this a 3-hour long video, so on to the next question, but again, you can pause it, you can rewind and go through the answers. I think they're actually quite educational. Given the recent interest rate hikes in Australia, as an experienced economist that you are, can you please suggest what you believe the peak of interest rates will be in 2023? They go on to say that, as an experienced economist, I believe that the peak of interest rates in Australia in 2023 will be around 4%. Now, at the moment, we're at 3.85%. According to Google's AI, we may have another interest rate hike coming. The RBA has already raised interest rates 4 times in 2022 and is expected to continue rising in 2023 in an effort to combat inflation. Now, it's interesting because it says that it's already increased by 4 times in 2022. We saw it much more than that. So it depends on when it's actually getting all of its information. I suspect there's a bit of a lag there. The RBA has stated it expects inflation to peak in its second half of 2022 and then start to decline. Well, so far that's true. If inflation does decline as expected, then the RBA may not need to raise rates as high as 4%. However, if inflation remains high, then the RBA may need to raise rates even higher. Ultimately, the peak of interest rates will depend on a number of factors, including the pace of inflation, the strength of the economy, and the actions of other central banks. However, I believe that 4% is a reasonable estimate for the peak of interest rates in Australia 2023. Now, to be honest, that is a pretty good answer. When you look at all of the things that are actually playing a factor in the RBA making decision, we could get to 4%. Now, obviously, you can't just rely on AI technology to tell you exactly when to invest, when not to invest, when to sell, and exactly what areas to buy in. But it does provide a really good guide if you are starting out and just saying, well, you know what, I want to start my educational process. Of course, we've got this fantastic YouTube channel, which I may have already subscribed to, but there are other sources out there. Now, the next one is about what areas to buy in when it comes to capital cities. So based on the last 20 years worth of housing data and real estate performance, what do you believe will be the median price for houses in each capital city in Australia in 2033? So in 10 years from now. So we can go down the list: Sydney, Melbourne, Brisbane, Perth, Adelaide, Hobart, Darwin, and Canberra. Sydney would be at 2 million, Melbourne at 1.8, Brisbane 1.5, Perth 1.2, Adelaide 1 million, Hobart 800, Darwin 600, and Canberra at 1 million. Now, these numbers alone probably make no sense because you're like, okay, do I now go into Google search and find out what the median house value is today and then what the percentage increase would be? Well, the beauty of YouTube is that I can bring you that answer right now. So I covered off the 4 top markets here: Sydney, Melbourne, Brisbane, and Perth. And I wanted to see what sort of percentage increase Google AI is predicting for these areas when it comes to houses specifically. Now, it's important when you're looking at this number, this is the median value of houses only. When you look at the median value of, say, Sydney, it calculates both units and houses. I just want to look at houses. So when I'm looking at today's value versus what it could be in 10 years' time, this is what Google AI is predicting. Sydney will increase by 37%, Melbourne will increase by 76%, along with Perth increasing at 76% as well, and Brisbane at 86%. Now, before you jump onto realestate.com and say, well, I'm going to sell my Sydney property and buy a Brisbane property because Google AI told me to, you need to factor in a lot of things here. Obviously, the cost at which you get in is a big factor in how much growth you'll actually have. So an example of this is going and finding the right suburb, even the right street to buy in. But if you pay an extra $20,000 or $30,000 than what you should be buying it for, you could go and wipe out the next 3 years worth of gains. And this is so important when you're going out there and buying property, because you always hear people come out and say, these are the best areas to buy, these are the hotspots. The truth is that you could go into a hotspot and you could be there even before anyone else is. But if you pay the wrong price today, it doesn't matter if the prices are going up in that area, you still made a bad decision. And that's why it's so important that you get the right team as well as the right education around yourself before going and purchasing something. According to this, you can see that affordability is going to be the main driver over the next 10 years. You've obviously got the Olympics coming up in Queensland, and that may have a carry-on effect to the regional areas as well, depending on how broad the infrastructure spend will be. But what I thought would be really interesting is to test a theory of the 18.6 year cycle, which I've covered on this channel. You can definitely go check out this video where I talk about land cycles and how it could affect prices here in Australia. Now, as we go through this, I'm going to share with you exactly what that could look like when it comes to a correction in this housing market. How much do you expect median rents will increase for houses nationally in Australia over the next 3 years? According to the latest data from SQM Research, the median rent for houses in Australia increased by 1.8% in the March quarter of 2023. This brings the annual growth rate to 7.7%. The rental market is expected to remain strong in the coming years, with rents expected to continue to increase, and this is due to a number of factors including the strong economy, the growing population, and the limited supply of housing. Of course, there are also some factors that could potentially slow down the growth of rents in Australia, and these factors would include rising interest rates and a slowdown in the economy. Now, I would go on to say, well, rising interest rates may do the opposite when it comes to rising rents, because as those interest rates increase, it's harder for people to borrow money to go and buy their own home. That's why we're seeing interest rates go up, and that in effect is causing rents to go up. And when you go and increase the amount of demand, given that we have such high immigration numbers coming, you could see those rents increase a lot faster. Now, for me on this channel, I've said for a long time, for the last 2 years, that we're going to see a rental crisis. It's going to be 10% plus annual growth rate when it comes to rents. So far, 1 year has played out. I think the next year is going to be this year, and it's going to flow on to 2024, where we could see increases in rents by anywhere between 10 and 15%. And unfortunately, I don't make up the rules, but that's just what the data is suggesting. As an experienced economist studying the markets for the past 30 years, what do you believe interest rates will be in Australia in May 2024? I'm not sure when you're watching this, but I'm recording this in May 2023. So I wanted to know, in a year's time from now, if I was to forecast what my cash flow would look like, where would interest rates actually be? And the Reserve Bank of Australia has started to raise interest rates to combat inflation. The cash rate is currently at 0.85%, which now suggests that the information hasn't really gone through to Google AI yet. But what's important is they say that the RBA is likely to continue interest rates until inflation is under control. This could lead the interest rates in Australia reaching 3.5% by May 2024. So again, you've got to take this with a grain of salt. All the information isn't present. It's not up to date at the moment because we're still early in AI technology. But what we can see is it's predicting 3.5%. And if we're at 3.85%, it's predicting some sort of cut. But what I wanted to know was if there was a recession in Australia or there was a recession in the US, what would happen to interest rates then? I'm going to cover that in a little bit as well. So far, if you've been enjoying this video, a massive way to show you are thankful for this information and that you like me coming out every week, you can help support the channel by just smashing that like button. It's completely free. It does help get this video out to more people. And to be honest, in a time like this, we really need these videos to go out to more people. So in line with the 18.6 year land cycle theory, when do you suggest the peak of house prices in Australia will occur? According to the 18.6 year land cycle theory, the peak of house prices in Australia is expected to occur in 2027. This is based on the theory that the housing market goes through cycles of boom and bust every 18.6 years. The theory is based on the idea that the supply and demand of housing housing are not always in balance, and that this imbalance can lead to periods of rapid price appreciation followed by periods of rapid price depreciation. The Australian housing market experienced a boom in early 2000s followed by a bust in late 2000s. The theory suggests that the current boom in the Australian housing market will peak in 2027 followed by a bust in the early 2030s. It is important to note that the 18.6-year land cycle theory is just a theory, and there is no guarantee that it will be accurate in the future. There are a number of factors that could affect the housing market in Australia between now and 2027, and it is impossible to predict the certainty that it will happen. And that is so true. That's the big takeaway from this, is that we could go out there and get bots and AI to all predict what could happen, but human emotion is largely what drives these markets. That's why we can go lower than we should technically go lower, and we can go much higher than we actually should. And that's where we start having corrections and booms and busts. My belief has always been that if you can borrow now and you can purchase good real estate, your entry is going to be your biggest hedge against any market movement. Now think about it this way. In 2022, we start seeing interest rates increase. We start seeing national house prices drop. You see all of these media headlines come out and suggest, hey, prices are dropping by 30% this year. We have a massive recession on our hands. This is bad. Inflation is so bad. Inflation is going to crack all economies. But in that same period of time, in 2022, we saw national house prices in Australia drop by about 7.1%. In the same period, we recorded here at Search Property, the buyer's agency I founded, 12.12% as growth rate. So if you really think about that, we outperform the market by 19%. And the reason for that is that we go out there and we're looking at different markets. If you need help in not only your strategy, but also picking the right properties at the right time, definitely go hit the link in the description below to go and visit the website. You'll find other clients like yourself that have left their video review of how they've gone through the service, how they've actually found the process as well. And if you think about not having invested, it means that you've lost potentially 12% worth of gains on leveraged money. Again, we know how real estate works, right? So if you go out and purchase a property for say 400K, you're not actually putting 400K down. You're putting a 10% deposit down plus costs. So your outlay could be close to about $80,000 to $90,000. So when you start thinking about a 12% appreciation on that asset, that's about $48,000 where you missed that opportunity to actually get in. So despite all the noise, I continue to go and buy property when I get the opportunity to do so, because in the long run, I've seen cycles play out in the time I've been actively investing, and I've studied the market's long-term trends over the last 30 or 40 years here in Australia. Now let's hit up AI with some crypto related questions. Now, based on the current rate of growth for Ether over the last 5 years, in line with the law of diminishing returns, what do you expect the price of Ether will be in 2025? This will all be in USD, by the way, and this suggests that $10,000 in 2025 is an achievable sort of price for Ethereum. At the current price point of about 1800, you're looking at anywhere between a 450 to 500% growth over the next 24 months. Again, it's super volatile, so you definitely wouldn't be relying on something like this to make that decision. That's Ethereum's price. What happens to Bitcoin? And in this case, AI is expecting the price of Bitcoin to reach around $100,000 by 2025. This is still a significant increase from the current price, but it is much lower than the growth rates that we've seen in recent years. What we've been seeing over time, as the asset class matures, you'll see law of diminishing returns. So in the first cycle, it could go up by 10x, in the second cycle, 5x, and the third cycle could be a 3x. Based on the current prices, you're probably looking at about a 330% increase on Bitcoin's price over the next 2 years. Now, my final two questions are regarding the recession and what it could actually do to Australian house prices, as well as the interest rates and the economy in general. So given the fear of a recession in the media, if we do see a recession in 2023 in the US economy, what effect will this have on the Australian economy? A recession in the US economy will have a negative impact on the Australian economy. The US is Australia's largest trading partner, so a slowdown in the US economy would lead to a slowdown in Australian exports. This would lead to job losses and lower economic growth. Now, what I've been saying is that the recession could cause inflation to free fall because you have job losses, you have people scared, and they don't want to spend that money. That's effectively what we need to slow down the economy. As that happens, we could potentially see rate cuts starting to come into the system, because now the government's worried that we're deflating and instead we want to be inflating between 2 and 3%. And that's when they start cutting rates. So my question to AI, do interest rates in Australia always cut faster than they hiked in that particular cycle? And based on previous cycles seen in Australia, what could the interest rate in Australia be by the end of 2023 if we were to see a US recession? We see all in the media headlines that the US will fall into a recession. At the moment, there's an 80% chance this could happen. So if that were to happen, how fast could we cut interest rates here? And the main thing here is that in the past, the RBA has typically cut interest rates by 25 basis points to 50 basis points in response to a recession. However, in some cases, the RBA has cut interest rates by more than this. For example, in 2008, the RBA cut interest rates by 4 1.25% or 425 basis points in response to the GFC. And we'll go straight to the last line. Again, you can pause to look at all these answers, but based on previous cycles in Australia, it is possible that the interest rates in Australia could be as low as 1.25% by the end of 2023 if we were to see a US recession. However, it is important to note that this is just a prediction and the actual interest rate could be much higher or lower. Now, using AI is fun, and going ahead and asking these prediction type questions is, again, just a bit of entertainment. But I think it's very important that we start using technologies like this to educate ourselves. There's a lot here that could make a lot more sense if it were in a video, which is why I make videos like this. But if you're someone that just wants quick answers, but also have it backed by some evidence, then again, I think Google's AI is a pretty good place to start, but you'd want to go and corroborate that with other sources as well. I hope you guys have enjoyed this video. If you want to see part 2 of Google AI versus ChatGPT when it comes to Australian economy and Australian real estate, type in the comments down below ChatGPT, and I'll be sure to make that video in the coming weeks. I hope you guys have enjoyed this one. Smash that like button, and I'll catch you guys in the next one. Thanks, guys.